Jan Szilagyi is the founder and CEO of Reflexivity. You may recall he's been on this show before for our Market Navigator segments, talking to us a little bit about how the tools you use can shine a light on certain parts of the market that are maybe indicative of things to come. So, Jan, thank you very much for being here with us.
Thank you for having me.
All right, let's talk about AI and whether or not the headline case here is, can an AI tool like Reflexivity or something else replace my financial advisor?
So I think ultimately the answer will be yes. I think in the interim, it's quite important to note that a lot of the capability is really enhancing what humans are very good at. So it's giving you the ability, as you were mentioning, to very quickly sometimes do a bit of analysis, try to look at the market through the lens of data analytics.
Now, if that's the case, I had asked it before about showing the performance of the S&P post-shutdown. It shows me every single government shutdown instance. It looks at the S&P 500. It tells me what it was at the end of it, what it was 6 months later. It shows me a chart of all of the performance, averages it out, shows me best parts of the market and everything else. To me, that seems like a fairly robust tool. We're showing it right now on our screen. The mean return is roughly 11%, and its best performance 6 months after a shutdown, according to Reflexivity, is a almost 30% gain. This is data mining for right now, but what's the next step for AI when it comes to helping you manage your money?
Yeah, so, the use case for us, we currently have Reflexivity news across a lot of hedge funds, also wealth advisors, large asset managers, and so on. And I think the next frontier will be the system actively highlighting dislocations that are happening and then say, you should pay attention to this. This is the likely evolution of this market trend, that market trend, and so on. So it won't wait for you to ask the question.
How is it that hedge funds, wealth managers, financial advisors are using a tool like this? What exactly are they doing with it in servicing their clients? Because this is a product that has a financial cost to it. So advisors who use it are paying for a type of service. What kind of value are they extracting as a financial advisor for a tool like Reflexivity?
So the main one really is when you are making financial decisions, accuracy is extremely important. And so you really care about the ingredients that go into this, right? They don't want you to just cast a very wide net and give back just any answer. What Reflexivity specifically is focused on is combining best of breed data sources with analytical capabilities that give you that certainty, accuracy, and as you saw yourself, transparency into where the sources came from.
Now, here's the other question I have. If everybody starts using, let's say hypothetically in this kind of new world, everybody starts using an AI tool to gain that edge. To me, that says that the edge disappears over time, spreads compress, because all of the same data that's being used and mined and calculated is being done so across multiple users at this point. So the arbitrage is gone by the time it's done. How far are we away from an edge disappearing because everybody is using AI for their financial decision making?
I think still quite far, in part because the quality of what you get out of a system like Reflexivity does depend on the quality of your questions. And so there will be people who are better at asking questions, looking around, thinking, anticipating, and then using a Reflexivity to give them either supporting facts or to effectively disagree with their thesis. Over time, as they become more autonomous, yes, there will be a degree of convergence, no question.
All right. In the last couple of minutes that we have here, because I could go on for hours about this, in the last couple of minutes, as you've been analyzing the data with Reflexivity and the tools that you have, is there anything that you've gleaned or have learned about what the market could look like in, say, the next 6 to 12 months? Is there anything that you are analyzing, the questions that you are asking Reflexivity right now that say, hey, these are probably the best sectors that you should be looking at, or these are the stocks you should be paying attention to? What are the stock picks and what are the sector picks that you've been generating so far?
One thing that has been top of mind, not just for us, but I think for the market as well, is to what extent can the economy suddenly and surprisingly slow down? And so in that environment, of course, you could get a response from the Fed, but assuming that that might be slow in coming, the sectors that Reflexivity has started to really focus on are much more of the defensive nature. So it looked at healthcare, it looked at things like utilities and so on, and de-emphasizing things, let's say more consumer staples, less consumer discretionary, fewer industrials and so on. And I think amongst the stocks that keep coming up are the likes of Johnson & Johnson, because it's part of the healthcare story, and then also Costco, part of the consumer staples story and so on. That's been a lot of the focus of the analysis recently.